Good evening, everyone. How are you guys doing today? Can everyone see my screen? If you can see my screen, just give me a yes in the chat box. All right, I see some yeses are coming in. Wonderful, wonderful. All right, let's jump into this evening's class. This evening, we're doing ending patterns versus leading patterns. Does anyone know what an ending pattern is? If you know what an ending pattern is, just give me a yes in the chat box. Or if you know what a leading pattern is, give me a yes in the chat box. Okay. All right. Okay, so basically a leading pattern is in the direction of the trend. And an ending pattern is also in the direction of the trend. But an ending pattern ends the trend, while a leading pattern continues the trend. So a leading pattern is a continuation pattern, while an ending pattern ends the trend. It's a reversal pattern. Okay? Now let's look at this. We'll take it straight to our chart. Let's see if we can locate some. All right. Now you guys will see I have some lines drawn here on my chart. Some of you who have come to some of the previous classes would have seen these lines. I also added the period separator. So this helps us to identify the time. Okay, so this helps us to identify the time. So the yellow line is on 9 GMT3, which is basically 2 a.m. Eastern Standard. So for now, let's use Eastern Standard Time, okay? So this is 2 a.m. Eastern Standard, basically the beginning of the European session. This is 5 a.m. Eastern Standard, basically lunchtime in the European session. And this is 8 a.m. Eastern Standard, and this is basically the open of the US session. All right, this period separator is showing us when a new day has started. Okay, everyone clear on that? If you're clear, just give me a yes. Wonderful. Okay, so let's see if we can identify some leading patterns or some ending patterns. Let me just browse through the price here to see if I can identify some. Are you guys familiar with the 12-12 method? If you're familiar with the 12-12 method, just give me a 12 in the chat box. Just type 12 in the chat box. I know many of you were present with the 12-12 class. It would be valuable if you were able to see the 12-12 class. You would be able to understand how I come up with these patterns, how I'm able to identify these patterns so quickly. And just so you guys know, these patterns are based on day trading, okay? I'm not looking at the price from a swing trading point of view or a scalping point of view. I'm looking at it from a day trading point of view, okay? Just letting you guys know. All right, so we're looking for a leading or ending pattern. Let's see what this one looks like. So the 12-12 method, basically what we're doing is we're looking at the lowest point of the day or the highest point of the day, okay? So in this case, the price was coming down and Lawanda, I believe the 12-12 method should already be in default. Yes, I think it should already be in default. All right, so basically what we're doing with the 12-12 method, we're looking at the lowest point of the day or the highest point of the day, whichever came in last. So if the lowest point came in last, we're looking at that point. If the highest point came in last, we're looking at that point, because that's going to let us know where the trend is going. Okay, so price opened up here. This is the start of the European session. This is where the market basically opened and we had price coming down. This is the lowest point of the day. As you can see, the price came down. It never came back and passed this area, this high. Okay, so this is the lowest point of the day. So basically what we do is we draw our trend line beginning from the lowest point, and we're going to push it towards the swing low until it is basically 2 a.m. So we're looking at the close of the 1 a.m. candle. So we're basically looking at from approximately 12 p.m. to approximately 12 a.m., right? So we're looking at that price data. So we're looking at 12 to 12 approximately, all right? So it's around 12 p.m. and around 12 a.m. because we're looking at the swings. So wherever the swings come, we're not looking to start off our pattern after we're looking at, this is just the period separator. We're not looking to begin our pattern from this point moving forward. Our pattern should be ending around that area. It shouldn't be starting here. It should be starting from around 12 and ending around 12. Okay, so starting around 12 p.m. and ending around 12 a.m. So we're looking at the swings around those times. Okay, so this is the swing low. This is the lowest point that the price came to for the day. So this is where we're going to start. So we placed our trend line here and we started from that point and extended our trend line to the next swing. And we're doing that until we get to the close of the 1 a.m. candle. So this is the swing that came before the close of the 1 a.m. candle. So this is where the trend line will be connecting to. The next trend line will come from the highest point that came after the swing low. So this is the swing low. We're looking for the swing high that came after, and this is the highest point, right? And then we extend that down like this. Try to make it as perfect as possible. Okay, and this basically gave us a flag formation. So this is not an ending formation. This is also not a leading formation. And can someone tell me why it's not? Who knows why it's not? Okay, so this is not an ending or leading formation because the price is not sloping down. This is a downtrend and the price is not sloping to the downside. So it's not moving in the direction of the trend. Okay, the direction of the trend is down and the price pattern is not sloping down. It is going sideways and it's contracting. As you can see, the trend lines are coming together. So this is a contraction, okay? And if you guys were present on my previous class, you would know that this would be a contracting pattern, and contracting patterns generally pack explosive power, okay? So look what happened at the open. At the open, you can see here that we had an explosion. Price came down aggressively. And it didn't really go much further than that. It just came down and that was the end of it. Okay, so we got an explosion and it stopped, consolidated for the rest of the day. Okay, Let's see if we find a leading or ending formation. All right, so this one looks nice. This one is a ending expanding formation. Okay, so this is an ending formation, but this is also expanding. Okay, now here you can see we have the lowest point that the price came to, and we connected it to the next swing. And this would be the highest point after this low, and we connected it to the next swing. And this is how we came up with this type of pattern. Now, these patterns also can cause the price to move in the opposite direction because this is an ending formation. Actually, this is an ending formation because the price broke out to the upside. Okay, and this is what makes it an ending formation. If it's a leading formation, then it's going to break to the downside. Okay, so this is the only thing that makes an ending pattern and a leading pattern different. An ending pattern breaks in the opposite direction of the trend, while a leading pattern breaks in the direction of the trend. Okay, so this would be considered an ending formation because it broke in the opposite direction of the trend. The trend is coming down and this one broke to the upside. So this is an ending formation. Okay. Now, ending formations, they generally, when I say ending formations, I'm talking about the ending expanding formations. Okay. So ending expanding formations or leading expanding formations, they would generally give you an explosion around 5 a.m. to 8 a.m. Eastern Standard. These are the times when these patterns cause the price to move. So you need to be careful with them, okay? Make sure that if you're going to trade them, you understand when you need to look out for your price movement. Okay, remember, you can also look at the economic calendar to give you some guidance as to where the volatility will come, whether it's going to come at 5 a.m. Eastern Standard or whether it's going to come at 8 a.m. Eastern Standard. Okay, so the economic calendar can give you a very good idea of when that volatility may come into the market. I also did a class on that, so you guys can check the vault. It should also be available in the vault. Okay. Let's see if we can find another one. Here's another ending formation. Why is it an ending formation? As you can see, it's breaking in the opposite direction of the trend. The price is coming down, the pattern is sloping to the downside, and we're breaking out to the upside. So this is an ending formation, okay? And if you look at the time, you can see here, we got a burst of volatility at 5 a.m. to the downside. We got a burst of volatility at 8 a.m. to the upside. Okay, so around these times, these are where you're going to find a lot of volatility coming into the market with these formations. Okay. Let's see if we can find ourselves a leaning formation. All right, I'm just going to scan with my eyes to see if I can find one. Let's look at this area. The price is moving up. This is the highest point that price came to before the day came to an end. Okay. And you have price trending to the upside, as you can see here. This is the next high that came, next swing high. And we're looking for a low. There you go. So this is a leading formation because it's sloping to the upside. Okay, here we had price break to the downside, but it also pushed right back to the upside. Okay, so this trend is still to the upside. So here we have this pattern. We can consider this one to be a leading formation. And with these formations, as I said, you would see the volatility coming into the market at around 5 a.m. or 8 a.m. Eastern Standard. And you can see that by just looking at the lines that I have here. This pink line represents 5 a.m. and this blue line here represents 8 a.m. Eastern Standard. And you can see where the volatility came into the market. Okay. Let's see if we can find another one. This one is sloping down. Trend is up. So this is not a ending or leading pattern. Let's see. This one is sloping up. Let us see what's happening here. All right, we opened here and down. Okay, so this is the lowest point of the day. Oops. And this is our next swing right here. So we connected from the lowest point of the day, the lowest swing of the day, connecting it to the next higher low of the day. And now we're going to connect the next high, next swing high, and we're going to connect that to the next available swing. And we're connecting it to the next available swing around 12 a.m. Eastern Standard, right? And that didn't happen until the close of the 1 a.m. candle. So we would have to use the 1 a.m. candle close as our next available swing, okay? And if you look carefully, you can see that the trend is up and you have the pattern moving to the upside, okay? Now, this pattern could also be considered a ending formation. And the reason for that is if we extend this line, the reason for that is you can see that the price stayed inside of this pattern formation and broke to the downside. It did kind of test the upside, but it broke down, okay? Now with it breaking down, if you look at where the volatility came in, I know a lot of us like to trade breakouts, okay? I personally don't like trading breakouts. I prefer to find my entry inside the pattern. And the best point to find your entry is when it hits the trend line, okay? So if it hits the trend line at 5 a.m. or if it hits the trend line at 8 a.m., that's the time when you want to go in the direction that you're looking to trade. So if it hits the trend line and it's a pattern that is an ending formation, at least at this point, you would assume that it would be an ending formation because it's moving up and it hits the upper trend line. And also it's happening at 8 a.m. Eastern Standard. At that point, you'd be looking to favor the short side, okay? At 5 a.m. Eastern Standard, you can see here that it did hit the trend line at around 2 a.m. Eastern Standard and started moving to the downside. So if at that point you were looking at going short, it would be good to wait for the close of the 5 a.m. candle. So the 5 a.m. candle closed green. At that point, I would not be looking to sell because it has closed green, which shows me that there is a possibility that the buyers may be into the market. Okay, so at a point like that, if I'm looking to trade this pattern, I would not get involved. I'll be looking for a bounce off the trend line. And if I'm looking to go short, I'm looking for a red candle. If I'm looking to go long, I'm looking for a green candle. Okay. So here you can see that price moved back to the upside, hits the trend line, and we get a red candle at 8 o'clock. So the 8 to 9 a.m. candle closed red. And at that point, the price pushes down aggressively. We could have gone short in a case like this, made some lovely pips on the way down. Okay. So let us see here. Let's see if we can find some more. Okay, this one looks sort of interesting. Okay. No, this one would not be ending or leading. Let's see. All right, I'm looking, 1 second. Okay, this one kind of looks, oh, it's okay. Let's look at this one. This one looks interesting. So this was the highest point of the day. So we opened around here. We did make a low, but then this is the most recent high of the day, okay? So we're gonna start here and we're gonna bring this trend line to the downside until around 12 a.m. Eastern Standard. And if you look here carefully, you can see that since we started the trend line here and we're starting our trend lines before the start of the new day, okay? So here you can see we started our trend line. This is the highest point of the day. And start our trend line here. We pull it down to the next swing. So this is the next swing. And it also coincides with the close of the 1 a.m. candle, right? And we're going to place another trend line below that. So we're looking at the lowest point of the day. So here, this was the lowest point of the day, and we're going to connect that to the next swing low, right? And this is a contracting ending formation. So it's a contracting formation. As you can see, the trend lines are coming together, which we sometimes look and call a squeeze, right? So the price is now squeezing together. This is a sign that we could be expecting some volatility. And with these contracting formations, we normally would get that burst of volatility coming in at 2 a.m. Eastern Standard, right? So that's the time that you'd be looking to get involved in trade setups like this. So here you can see it's 2 a.m. Eastern Standard and the price explodes to the upside. And we get this nice burst of volatility, right? And this, as I said, would be considered a contracting ending formation. Okay, any questions so far? Can someone tell me why this would be a ending formation? Anyone? Just let me know why you would consider this to be an ending formation. Okay, Grace says it's going opposite the trend. Jonathan says reversal, and you're both correct. The price broke out in the opposite direction of the trend. Lawanda says because it broke out in the opposite direction. That is also correct. So it broke out in the opposite direction of the trend, and that makes it an ending formation because it broke out in the opposite direction of the trend. Okay. Now, it is good to be able to identify these patterns because they would give you a great idea of what you can expect from price. Now, a lot of us look at price in different ways, but it's good to know as many approaches as possible. This way you can compare them to each other and decide which ones would be most profitable for you. It would help you to filter out the best setups to use in the market, okay? Now, a lot of us will be looking at this and saying that it's a downtrend, and because it's a downtrend, we'll expect the price to continue moving down. But if you understand the pattern formations, you would be able to identify where the most probable direction would be. And because this is a contracting ending formation, and confirming it's an ending formation is on the breakout. It broke out to the upside. So this is an ending formation, which means the price is likely to start moving to the upside. So as you can see here, upside, correction again, upside. Okay. So let's see, can we find another? Okay, this one looks nice. So this is the lowest point of the day. Yeah, we did not break the high here. So this is the lowest point of the day. As you can see, it's coming in way before 12. So this 1900 hours on NT4 is actually 12 p.m. Eastern Standard. And you can see our lowest point came in before that, right? So we're going to have to use this point here and connect it over here. All right, so this one is sloping to the upside. So it's not going to be an ending formation. And this one is sloping down. So this is a nice contracting formation, right? And as you can see with contracting formation, it exploded at 2 a.m. and came back to the downside, right? So this is a nice formation here. Not the one we're looking for. Okay, let's, nope. This one is not one. Let us see. Let us see. Okay, this may be one. Let's take a look at this. This is the lowest point. This one here is the lowest point, and we're connecting that to that swing. And this would be the highest point right here. Connecting it here. So this is an expanded formation, right? Now, this one could be considered a leading formation because it's expanding to the downside. As you can see here, it's expanding, leaning to the downside. So we could also consider this to be a expanding leading formation. And as you can see, what happened is in a case like this, we would normally get our breakout between 5 a.m. Eastern Standard and 8 a.m. Eastern Standard. So here you can see we had a volatility coming into the market at around 8 a.m. Eastern Standard. With these expanded type formations, in a lot of cases, you can see the price staying within these trend lines for quite a while, moving with low momentum and low volatility. Okay, so this is some of the reasons why I prefer to use contracting formations in opposed to expanding formations, though we could get some explosive move on the expanded formations between 5 a.m. and 8 a.m. Eastern Standard. However, normally those moves don't go too far, okay? And the further the explosion goes, the better it will be for us, okay? We want the price to move. The more the price moves, the further it goes, the more capital you can make, okay? So let's see here. What else do we have? Okay, I'm looking. All right, this one looks interesting. All right, so this is the highest point that the price came to, connected to the next swing high. And this is the low. So you can see here that the price is showing us that we're getting some sort of expanding formation. Okay, we're getting some sort of expanding formation in this case. In situations like this, where the high comes in late, we basically want to identify the waves. Now, some of us may not be able to identify waves in order to help us get a more accurate read on this formation. Let me just move this. Okay. Let me see here. This is a nice wick candle right here. So this is definitely a low, but this low is coming in on the start of the new day. And we don't want to start off drawing our trend lines at this point. If we started off drawing our trend line at that point, it would be a nice pattern like this. As you can see, it will be a completely different pattern. But we don't want to draw our lows in at that point. We prefer to draw it in before. So this would be more what the pattern looks like. Now, I have taught you guys that we can draw trend lines from wick to wick, as in here, wick to wick, or we can draw them from wick to body. As you can see, connected to the next bodied candle, like this one. And that would help us to see the variations in pattern formation, okay? So this would be a variation, while this one is also a variation, right? This one is a bit on the steep side, though from looking at it, it looks very accurate, but it's still on the steep side, right? It's very steep. So this is something that I would consider to be a leading formation. Why? Because the price is broke out to the upside, right? This pattern was also sloping to the upside. So this is something that I would call an expanding leading formation, right? And with these types of formations, you can expect volatility coming into the market around 5 a.m. and around 8 a.m. Eastern Standard. And as you can see here, most of the volatility in the market came in at 5 a.m. And as you can see, this big move to the downside. Okay, we did get a burst of volatility at 2 a.m. Eastern Standard as well, but the bigger burst of volatility came in at 5 a.m. Eastern Standard. Okay. So let us see here. What else do we have? Okay, let's look at that one. Here, and we connect like this. And in this case, we have a low in this, we have a low in this case, but it's happening at the start of the new day. We can't use that one. So it's normally going to be done like this. Right? So this is still an expanded formation. And with this type of formation, as I said, we'd be looking for volatility coming into the market around 5 a.m. or around 8 a.m. And this is the 8 a.m. candle. And this is where we got some volatility. As you can see, we didn't get much. Normally, in cases like this, where we get expanded formations, you would normally see the price kind of stay within these trend lines for a while. Okay. My preference is contracting formations. So I prefer to stay away from expanded formations. I prefer to stay away from leading formations as well. I prefer to stay away from ending formations as well. Some of them do provide good opportunities, but the contracting ending and contracting leading formations are generally best, okay? Not the expanded ones. And in some cases, even the parallel ones, like we look at them and we call them flags. Sometimes we don't get a big breakout from them. We get a very small breakout, or what we can call fake outs in many situations. Okay, so I prefer to go for contracting formations because they pack the most explosive power. Okay, when they blow, they go very far. Okay. Any questions so far? Anything else? Anything you guys are not too clear on? Bring on your questions, guys. More than happy to take some questions. You will always find these patterns on generally every pair. Okay, so it's not a situation where you can only find these setups on the euro dollar, US dollar pair. You can also find them on pound, on euro, JPY, or whatever pair you're looking at, you can also find them. I like trading with pairs that have an off session. So trades that trade after hours. Okay, this way you can see the after hour data, so you can actually be able to understand what the market makers are looking to do. Okay, because normally they plan their moves in the after hour sessions. All right, let's see here. Is there a reason PDF chart simple? Oh, what do you mean? I know autocorrect messed up what you're typing. Oh, okay, okay. Is there a reason for these patterns? What do you mean by, is there a reason for these patterns? Meaning like what the patterns are saying? Are you referencing the language of the market makers or the language of the markets? Let's just give Sungwoo a chance to comment. Just try to be a little bit, okay, okay. So Sungwoo is basically saying, yes, the formations. What do the formations mean? Okay, so generally, these formations do tell us a story, especially contracting formations. So contracting formations basically tell us that there's going to be an explosion, meaning the price is going to move aggressively. Volatility is going to be coming into the market. However, based on the knowledge that we've been provided, you know, from the various methods of trading the market with bullish formations and bearish formations. Basically, these formations provide us with a bias. Now, they are relatively correct for the most part. However, in a lot of situations, I'm sure that you guys have seen that you're looking at a bullish formation, but the price goes down, doesn't go up. Or it may break out to the upside, then shoot to the downside. I'm sure you've seen setups like that. Okay. So from my own research, I've realized that a lot of formations don't necessarily mean that it's bullish or bearish, right? And when you're looking to get into the market, you have to have a little bit more to go on. So I like using time. I like using the session open, the session lunchtime, the session start time, So these are the times that I use to help me get into the market. So for example, if you're looking at even this one here, this expanding leading formation, this is 2 a.m. Eastern Standard. This is the start of the European session, right? Here you can see we have a red candle, and this red candle would be telling me that I should be expecting the price to push to the downside. So if I got involved in the close of that red candle to sell, then you can see the price would come back out of being stopped out, because the market makers are looking to liquidate your positions. So this would be a very obvious trade to most traders that they should go short because of the information that we've been provided with, right? We've been told that this would be it's a bullish formation, yes. However, we've been told that the price needs to come down and then go up, right? So we've been told that these patterns are going to have certain amounts of touches on the trend lines. And so we'd look to have it come down, maybe hit the trend line, then go to the upside. So this is one of those patterns. If you're looking to trade inside of the formation, you'd be looking to sell, right? However, my approach, I like using a semi-automatic approach to my trading. So I've coded a trading bot, which basically, if I get into the market at 2 a.m. Eastern Standard using my economic calendar as guidance, letting me know when the volatility is expected in the market. So for example, this is, what day is this? This is July 29. Let me see if I can find. July 29. I'm just going to quickly look for July 29, okay? July 29. Good. So my economic calendar is telling me on July 29 for Euro USD, we're going to have, some high impact news events coming in, basically around the open of the European session. So this is 3:55. We have another one at 7:30. And then we have some US news events, high impact news events coming out around 8:30 and 10 o'clock, right? So with looking at this, my start time would be 9 a.m. Eastern Standard. However, with trading expanding formations, it is best to look at 5 a.m. Eastern Standard and 8 a.m. Eastern Standard, right? So I would not be excited to get into the market with an expanded formation at 2 a.m. Eastern Standard, all right? So I'd be looking at 5 or 8. So this would have been my 2 a.m. We did get a burst of volatility. This would have been my 5 a.m. and this is my 8 a.m., right? So 8 a.m., I would be looking to buy this. And the way how I enter is different from how a lot of people enter. I'll be entering when the price starts to go to the upside. Okay, so this is, if I'm entering at 8, this candle would be closed when I'm looking to enter. And I'm looking at shift of momentum as well. So if I see the momentum is shifting to the upside, then I'll be entering to the upside, especially if price breaks the high of this red candle, then my entry would be around here, and I'm going long, and I'm waiting for price to either engulf one of the previous candles, or I'm looking for some other reason to get out. For example, I'm looking at support and resistance. For some of you who are support and resistance traders, I'm looking at market geometry, which is measured moves. There are many, many different reasons why you may look to get out of a trade. Okay. So you just simply employ whatever method you're looking at. If you're looking at getting out of the trade at 12 p.m. Eastern Standard, then this would be 12 p.m. Eastern Standard. You jump out of the trade at that time, okay? Because it is good to get out of your trades around 12 p.m. Eastern Standard. Why? Because generally volatility dries up in the market around that time. And some of us who want to get out of the trade at 4 p.m. Eastern Standard, this would be around 4 p.m. right here. So you can jump out of the trade at 4 p.m. Eastern Standard. That's if you're using time for your exits. Okay, so there are many reasons, many things you can do to exit the market. There are many ways you can enter the market as well. So you would have to make your decision as to what approach you'd like to use. Over the years, I've decided to go with a semi-automatic approach, right? So my approach is changing a lot. It's evolving over time, okay? So I see someone here mentioning fake outs, Sung Woo. So fake outs won't really affect me much because of the way how I enter. I may take on a loss, but I'm going to be in the next trade to catch the win. Okay, so I may take on a small loss whilst I'll be in the next trade catching the next move, making up my loss, ending out in profit. Okay. So one of the most important things is to make sure that you know when to get out. Okay. A lot of us like getting into trades and holding them all the way into the next day. In most cases, it wouldn't work out. Okay. Unless you understand how the market is moving and what trend you're in, then you can decide if you're going to hold a trade and swing it. Okay. But be prepared for the turbulence on the way, because if you're swinging to the downside and it continues moving to the downside, you're going to have price moving down. Then it's going to be moving back to the upside, making a correction. That correction generally will be letting you know that the price wants to go down again. So you're going to have to hold on to the price, hold on to the trade, and wait for the price to move to the downside in your favor. A lot of us don't have enough nerves to wait. We don't have enough patience. We don't have enough discipline. So in a lot of cases, you may find yourself jumping out of the trade when it goes against you. So you give back a lot of the profit, or sometimes all of the profit, okay, based on where you entered. All right, so this will bring us to the end of this evening's class. Before I go, do you guys have any questions? Is there anything that you're not too clear on? Anything that you'd like to share? All right, just giving you guys a few seconds. Type your comments, drop them in the chat box. All right. Okay, you guys have no comments. You said great. Thank you as always. You're most welcome. All right, guys, thank you so much for coming. You have yourselves a wonderful evening. It's been a pleasure having you as usual. Bye-bye for now. I'll see you on my next class. Lawanda says, no questions, nice teaching. You're most welcome, Lawanda. You're most welcome, Bella. You guys have yourselves a wonderful evening. Good night, Grace. Thank you so much, Grace. I see Uraji. I've never seen that one before. That's a nice name. Thank you so much. Sangwoo, appreciate it, Coach. You're most welcome, Sangwoo. Enjoy. Good night, Lawanda. Good night, everyone. Jonathan, you're most welcome, Jonathan. You have yourselves a wonderful evening. Bye-bye. See you guys next time.